Hey guys, what's going on? It's G Dinero, and I'm coming to you live this afternoon just to show you real quick a little bit about the charts. I know a lot of you have seen the updates I've been doing. I've done a couple of updates on option breakdowns. I've done an update on the opportunity costs of not having cash. And today we're going to go into a little bit of technical analysis to give you an idea of some of the things that I cover in my courses that I teach. So today we're going to take a look at the Bitcoin chart here. You'll notice I have it on a 4-hour interval with regular candles being shown, okay? And I'm using Coinbase to get the data from. And what you'll see, a lot of people were a little bit nervous today. They saw this drop that took place earlier today, and we're all the way back down to levels unseen, as my friend James would say, since December the 30th. And so it's been a couple of weeks, about a week and a half, and we're right back to where we were then. And so you ask yourself, why? Okay, well, one of the reasons why is we did have some selling signals, you'll notice, right beforehand. The other one is apparently the Department of Justice is going to be selling somewhere in the neighborhood of 69,000 Bitcoin, supposedly. Again, there's rumors of that. It's on X. It's been reported in a few different places that the Department of Justice is going to do that. Who knows what the real truth is? I'm not here to determine why it happened. I'm here to show you some of the things that the chart is telling us. So again, we're down here right around that $91,000, $92,000, $93,000 mark. You'll note that we were in a channel right here. We've been very much respecting what's called a linear regression channel. We've been within that channel over the last 3-4 months, making our way back and forth on either side of the midline, as high as touching the top of the boundaries here for about a month straight. Now we're down touching the bottom of the boundary over here on the right-hand side of what's called a linear regression channel. Some of the other things that you'll note that I have on the chart, I have the all-time high listed right here where we hit the all-time high at $108,388, $108,388. That was hit back there in December. I think it was on the 17th to be exact. The other thing that you'll see on here are moving averages. Green, that's my 50-day moving average. Red, that is a 100-day moving average. And yellow, that's a 200-day moving average. So 200-day moving average down there around $73,000 right now. The 100-day moving average right there around $85,000. And the 50-day moving average at about $97,500. So what can the moving averages tell us? Well, real quick, we were holding on the 50-day moving average. We broke a little bit below it, right back up on the 50-day moving average until we lost that as support. So typically in a bull market, the 50-day moving average will act as support. You might dance around either side of it, but usually in a strong bull market, you want to be above that 50-day moving average. You'll note that we dropped below it. Those of you that have the Invest Answer suite of products, what you'll notice is I have the Confluence model turned on twice. I have it turned on once up here, twice down there. If you don't know what that means, again, I would highly advise you go ahead and jump into one of my classes so you can learn more about how that operates. But as you can see, if you look here at the chart, we're down below, down in this lower 1/3 of the confluence cloud, right? We're no longer up here in the red hot zone. We're not in that middle zone. We've actually dropped down into the lower 1/3 of the confluence cloud. That lets us know that Bitcoin currently, per the indicators, is very much oversold. Another indicator of that is the mean reversion tool. And you'll see here on the mean reversion tool that we're approximately 1.5 to 1.7 standard deviations mean reverted or oversold to the downside. Typically that occurs when the asset is below the price that it should be, quote unquote. Again, when I say should be or it should be at, that's just what the models are telling me. That's not my opinion. That's not me telling you that I think Bitcoin should be anywhere else except where the models are telling me it is. So few things again, mean reversion, significantly mean reverted to the downside. Price is in the lower 1/3 of the confluence cloud. We've just come off a sell signal. Trend is flipped. The trend is currently going down. We're looking to make another bottom. Something interesting to note, if I back out just a little bit and turn on this trend line that I've drawn. Let me get rid of some of these drawings right here. If I turn on the trend line that I drew here, that yellow line, what you'll note is that it was resistance back here in November. As this bull run took off after the elections here in the United States, you'll note that this was resistance. That line that I drew has been support 1, 2, 3, 4, 5, and now 6 times. Very strong indicator of support right here in this $91,000 to $93,000 range, right? $91,000 to $93,000 range. Also, you'll note that I have some Fibonacci lines drawn on here. So with that being said, the 78% Fibonacci line is at 88,500. That should act as the next area of support. So if this $91,000 to $92,000 were to break, if the Department of Justice sells all those coins and that's what causes Bitcoin's price to drop, or if jobs data comes out, or if interest rate decisions come out, whatever it is, the big macro factors causes a panic in the market and it drops, the next level of support is down here at 88.5. Below that, the next level of support would be the 100-day moving average. And finally, the last level of support down here would be the 200-day moving average and or the 61.8 or golden ratio for Bitcoin. So that's what I see with Bitcoin right now. What do I think? I think we meander around in this area. Should see a bounce off of this, or at worst off of the 78.6 Fibonacci level. So that's what I'm looking for. That almost looks like a smiley face. We'll turn it into one. And with that, guys, I will leave you. If you like the content, make sure you like this video. Make sure you comment. Drop me a comment. Let me know, what do you like, not like about these things that I'm doing. And lastly, make sure you subscribe to the channel. I'm going to continue growing the channel. I'm going to continue trying to add as much value as often as I can. Can't guarantee I'll do it every single day, but I'll add as much value as I can every single day. And that, my friends, is free. If you want more, if you want to learn how to do technical analysis, if you want to learn how to read the charts, if you want to learn how to trade options, check out my website at gdenarocoaching at gdenarocoaching.com. Stay tuned for some new upcoming classes that are going to be launched at the beginning of February. Those will become available within the next week or two. And with that being said, here's to increasing your financial literacy. We'll see you soon. Take care.